Welcome to Financial Coffee Talk with Shane Amy and Shane Swearingen, your planning duo from Shane and Shane Financial.
Welcome into Financial Coffee Talk with Shane and Shane Financial. Shane Swearingen, Shane Amy here. Gentlemen, in the last year and a half, the Federal Reserve Open Market Committee, the FOMC, has lifted interest rates 11 times to their target range of 5.25% to 5.5%. What do these now higher available interest rates mean for savers and investors and retirees looking for income?
Yeah, great question. Here's the deal with that. So this hasn't happened in over 2 decades, right? I mean, we've had ultra low inflation, ultra low interest rates. I mean, the last time we were talking about interest rates, late 80s, early 90s. Nowadays, this is a big deal. And this is a huge deal, actually. So, when we talk about interest rates, we talk about yield or things like that, it basically means that you can get more money and take little to no risk. So all of the old school things that, have kind of been on the shelf, or, we had to use them when we had to use them type of thing. I mean, these insurance-based products and, different types of insurances, annuities, money markets, CDs, bonds, those sort of things. All of that stuff now is back on the table. And as a consumer, as an investor, you really need to start to pay attention to some of this stuff. And, Shane and I, will always be, sort of market-driven guys. We believe in the market, but we also believe in taking advantage of things when they happen. And so, I think, we're shooting this on a Friday. I believe a couple of days ago, the Fed paused on raising interest rates again. So, if they do raise it, maybe it's one more time. If they don't raise it, it kind of is what it is. And so as a whole, things are probably about as high as they're going to be right now, which makes these annuity type products, these income type products, pretty attractive. And we'll be reaching out to all of our clients. Back in the day, Shane and I didn't use too many income features on annuities, kind of only when we had to. And those folks that we had to do that with, that had structured income, you're going to be getting a call from us soon, because those payout rates that were starting with a 4 are now starting with a 7. And Shane Swearingen can give you some perspective on that, and it maybe 4% to 7% doesn't sound like a big deal. But, we've had the ability to get our clients, tens of thousands of dollars more on an annual basis. So you really need to pay attention to this. You need to be asking your advisor. You can certainly give us a call, shoot us an email, and let us know. But please pay attention to these old school things that are back now, and that they're simply back because interest rates are so darn high.
We've gone through a drastic change from just 24 months ago. Shane Swearingen, conservative investors and those seeking income do often lock into longer term periods. Is it now time for those individuals to maybe reconsider and see what else is out there?
Income withdrawal rates, specifically talking about annuities, are significantly higher. That's as simple as I can make it. Clients that we've had from a fixed income standpoint, or that were using these types of vehicles 3, 4, 5, 6 years ago, like Shane mentioned, were conservatively getting, a 4.5% withdrawal rate. That's the percent that you can take off of your money, that the annuity is guaranteeing you for a lifetime income stream. And now we're talking about 6, 7%. So if you really take a step back and look at it, we're able to put our clients in a much better situation, resulting in several thousands of dollars more per year. In some cases, we're seeing 10 to 15,000. So again, those are astronomical changes from 3, 4, 5 years ago. So we have to take advantage of that. If you have an annuity that even is turned income on and you are receiving those benefits, it makes sense to look at that. If you are a potential client and you're looking at guaranteed income streams, now is the time. Conversely, with a CD or a bond, those are short-term interest rates that you're locking in. When we're looking at insurance accounts or investments or annuities in particular, you are locking those rates in for a lifetime. So there's a huge difference there that people need to understand. There's a huge opportunity at the end of the day.
So Shane Swearingen, back to you. Current clients should look out for a call from you, or maybe even give a call to find out more about these new, now higher available interest and payout rates.
Absolutely. We've already reached out to several folks, but yeah, please reach out if you do have something that you want to have us take a peek at, but we will be reaching out to most of you. Again, some of you we've touched already, but if this message gets out to you, please give us a call. We can certainly benefit your situation right now.
And Shane, Amy, as always, there at Shane and Shane Financial, you help clients do a side-by-side comparison, showing them what they have versus what is out there and available to do a full analysis of the benefits of any change that would be suggested.
Yeah, good question. Just to refresh everyone's memory. Yeah, I mean, per usual, we're still fiduciaries. We're still independent. We don't work for any particular insurance company or annuity provider or a mutual fund or whatever. Yeah, we're just going to put it out on a spreadsheet. If we can beat it, we're going to beat it. If we can't, then you're going to stay in your same place. But I mean, folks, this is easy money. This doesn't come along too often. And I don't say that too often. And, if you've been in an annuity for 2 years and, you're in a 10-year surrender period, it doesn't matter. A lot of these companies are giving out pretty big bonuses, and not because they're nice guys. They just want to attract you to do business with them. Insurance companies have an appetite for this type of business now. They're well positioned. They're well hedged. This is a situation that, the doors are going to kind of open and shut, and we want our clients and anyone listening to this to take advantage of it.
Well, if you would like to find out more, if you would like to be in touch, you are always welcome to give a call to Shane and Shane Financial, 888-300-3811, 888-300-3811, 888-300-3811, or skip the phone call, go online, ShaneandShaneFinancial.com. They are always available there. ShaneandShaneFinancial.com. Shane Swearingen, Shane Amy, the team, the advisors, your resource, ladies and gentlemen. And gentlemen, we always appreciate you being here, providing the information that savers, investors, and proactive planners need.
Thanks, Peter.
The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes.
Fee-based financial planning and investment advisory services are offered through Truvestments Capital, LLC, an SEC-registered investment advisor.